to create new forms of collaboration between people. As I told you, you can form new kinds of companies, you can form new kind of banks, you can form new kind of insurance companies, you can form new forms of incorporation, you can form new kinds of messenger apps. You can create any different form of collaboration as you wish. And if people are willing to accept it and they're going to participate in it, that form of collaboration will become powerful. So you got to understand that blockchain is as much as a business revolution as it is a technology revolution. If IIM Jammu had a blockchain version, okay, let's say if we had a blockchain version of IIM Jammu, and if that appeared, it's quite possible that students from all over the world would compete to be in IIM Jammu. The fees of the blockchain version of IIM Jammu would be negative fees, which is instead of you paying the institute the fees, the institute will pay you the fees because they want the best people. And you would be able to choose your job probably the very first month where you enter. It's all possible in blockchain version of IIM Jammu. And we will see how the education sector gets impacted as time passes by. Now the question is, if blockchain is so powerful, why is it not more popular? And the answer is, when a new and radical ideas dawn into our world, it takes time for its adoption. Democracy was introduced in 1780s in the world. And which country it was? America, United States of America. That's where democracy, the modern democracy as a notion, took birth. We are in 2020. Even till now, all of humanity still does not live under democratic systems. You would think it's just common sense that people would want to be free. People would want to have more power to decide who governs them and how they get governed. But we have a next door neighbor, very next door neighbor, a giant neighbor, and that's not democratic. And there's another country called North Korea where people are virtual prisoners in their own country. And you would think that this would not be possible. How is it possible that we have discovered an idea like democracy and it's not there? Answer is, it has still not found adoption in 100% of the world. We still have people in the world who do not have access to electricity, even though this technology is available with us for more than 100 years. Internet was available to us by 1969. That's when the universities at UCLA, Abhishek was saying that I traveled quite a bit. So I did go to the very first place, the first node, which was the first IMP, Internet IMP, message processor, the IMP. They used to call the nodes were called IMP, which was the start of Internet. It's in UCLA. Computer Science Department, Boether Hall. So the building is electrical engineering building. As place it was born. It was born in 1969.
Rohit, so sorry if I may interrupt you.
With funny things on internet.
Rohit, can I interrupt you once?
Yes.
Yeah. Okay, so gentlemen and ladies.
Yes, please.
Of course, there are a lot of things which I can talk formally in the class, but Rohit is talking about this concept that internet was introduced in 1969, and it took till like 1994 when the modern browsers were introduced or developed. that option actually kind of kicked in. But can you guess what was the first ever e-commerce transaction that happened? Can anyone among you guess the first ever e-commerce transaction that happened? Of course, you have a paper next year, a course in next trimester. But can anyone guess what is the first e-commerce transaction that happened on internet? When did that happen? Would anyone like to make guess?
So it was in MIT.
At MIT, and what was the thing that was transacted?
Sir, I guess it was marijuana.
Yes, I think it was 1972 or 1975. It was a transaction of marijuana, which of course is definitely illegal and we strongly discourage. But yeah, so that was the first transaction that happened on the internet, e-commerce transaction that happened on the internet. And like formally, I think it was in 1994 or 95. The Pizza Hut, they came up with a website, pizza.net something. So a pizza was officially sold on the internet. That was more of an official transaction that happened. But yeah. Anyways, Rohit, please carry on.
Yes, so very good interruption, a very good piece of snippets that you have given, Abhishek, and please feel free to join and add as we go on this presentation. So it's interesting. See, you talked about e-commerce. E-commerce as a technology and the potential was available in 1975. But we did not see Amazon until 1996. Why? The question is why, if people knew it 20 years before that e-commerce is going to be big, why didn't we get e-commerce earlier? People knew in 1971 that email is going to be big. But we did not get Hotmail until late 1990s. People knew search engine is going to be big, but we did not get Google until 1999. So that's the whole way the world goes, that even if the technology is available, it takes an adoption cycle. And the two factors which is responsible for the adoption cycle, the first is the technology has to be easy enough. And until browsers came, the technology of internet was simply not easy enough. Only the nerds and computer scientists and university researchers, they had the ability to access internet. And the same is the case with browsers, with blockchain today. Blockchain is just too difficult, and that's one of the problems that RanchiMall is effectively is trying very hard to solve. That is our core focus, to make blockchain as a technology very, very easy for everyone to work on. So blockchain story will be no different. It will take its time before it gets adoption. But just because blockchain today is not popular, it does not mean it is any less revolutionary like internet itself. And I'm as Abhishek was saying, I'm a technology guy and I like to experiment. So I've experimented with a lot of things. I've experimented with AI. I've experimented with 3D printing. I've experimented. I've interacted with people in IoT space. But I made up my mind that I'm going to dedicate myself to blockchain, and that happened by 2016. When I was exploring all these technologies, is because I realized that blockchain is internet to the power of 100. That's the impact that's going to make. So what internet did? Why internet was so impactful? Internet was impactful because it connected people with newer sources of information. And blockchain is equally impactful because it connects people with newer sources of collaboration. Currently, at this point of time, if you look at your collaborative, your collaborative opportunities are very, very limited. You can collaborate only with companies. You can collaborate with government. Suppose you pass out from IIM Jammu. Your opportunities are very few. Either you would go and do pick up a job with a large company, or you would do higher research and higher education in US, or you would do a PhD somewhere. So as a graduate of IIM Jammu, your collaboration opportunities to further your career is either government, is a university, or a private sector company. That's it. Can you collaborate automatically and through a very easy system, through a fellow student somewhere in US, in such a way that it can give you an earning and living? The answer is no. It's very difficult at this point of time. But when blockchain comes, and when blockchain is all pervasive, then all you need to do is to take a blockchain ID, find out an area of your collaborative interest, put your hat into that ring, jump into it, and not only are you earning, but you're also finding professional fulfillment. You're doing things that you really want to do. That's the fundamental opportunity and the fundamental value proposition for blockchain. So I'm going to talk about two forms of collaboration. One is, how do you decentralize investors? And second, how do you decentralize customers? So the way I'm going to structure it, I'm going to first give you a very small snippet, a very small briefing on both of these aspects, because RanchiMall has done that. In my previous companies, we needed to have either a large investor or a large customer. In RanchiMall, our investors are decentralized. We did what is in 2017, we did what is called as an initial coin offer. And we got investment from not large people, but our friends only. Very few, maybe 100, 150 friends. They invested in RanchiMall. But I didn't really have to go to a venture capital firm. I never had to make a presentation. I just told them this is what I'm doing, and they participated. But that's all it took. So this entire collaboration that we did through a new form of methodology called ICO, it essentially decentralized investing. But the real power came when we also realized that we don't have to sell anything to any customers. Before this, I was in a company called Ernst & Young, which is a consulting firm. And then I was in my own startup called Control Case, which is again working with MasterCard and Visa. And we used to do what we call as PCI DSS audits for them globally. But we definitely had to sell something in both of those companies. I needed to find customers.
So sorry, guys, I'll just interrupt. Rohit, sorry, I'll just interrupt. So gentlemen,
please.
And ladies, I think Rohit is being just a bit too modest, because he introduced Control Case in just so low light. But Control Case, I believe it was one of the first and pioneer companies in the internet security and how to ensure the whatever transactions that are happening. That was, it's a big deal, guys. Control Case was a big deal. Rohit is being a bit too modest. So if I were you, I would have asked Rohit what was Control Case all about. So maybe Rohit, you can tell what Control Case was all about. Yeah.
Okay. So Control Case, you're right.
Now.
Okay. So Control Case was, I would say, just not India, but Asia Pacific first firm that was licensed for PCI DSS. So what happened was Visa was coming up with a new requirement, and it said that we're talking 2004. It's exactly the year when Control Case was formed. So Visa came up with a new requirements, and it said that we want all our large banks and all the large merchants who are accepting Visa credit card, they need to be certified for internet security. And they specified the format as to how that internet security can happen. But they put a very tough condition. They actually put two tough conditions. The first tough condition they put was you need to ensure, suppose if any of those entities, if they get compromised or hacked, Then the certifying entity, like the person who would certify internet security for the large banks and the merchant, they'll have to pay all the money. That's the first condition they put. And the second condition they put was the insurance amounts are pretty high. So what happened that the biggest players of its time, the big four, KPMG, Ernst & Young, Deloitte, they refused to participate in PCI DSS. And that opened up a window of opportunity for us control case. But PCI DSS was not a market at that point of time. Like there was no business. So none of the internet security companies also went there. But we, in control case, we figured out that opportunity, and we aggressively pursued Visa for that. And Visa was, essentially we were the only person in whole of India to have the PCI DSS certification. But when I looked at when I looked at Asia Pacific, there were at least 12 different countries where we were the only company that were allowed to do PCI DSS. So we were the only one in Korea, South Korea. We were the only one in China. We were the only one in Vietnam. We were the only one in Malaysia. We were the only one in Japan. Essentially, there were companies from Australia. There was Australia. That was pretty all about it. So there was us from India, one company, and there were a couple of companies from Australia and New Zealand. That's about it. And that's how we got to start with control case. And so what happened in control case, that once we were impaneled in PCI DSS, we started getting business left, right, and center from all the banks and merchants from different countries of the world. And we never had to do any selling. We simply sat, and the engagements came our way, and we had to make sure that we did a good job of auditing, because the risks were very, very high, and we're taking a lot of risks there, and which we did. And we became one of the largest firms just not in India, but in the world in PCI DSS. So that was my first startup.
So sorry to interrupt again, Rohit. So guys, yes. now that you understand the significance of control case, I'm sure you are getting some kind of hint that if you want to start your own startup, from where or to whom to approach for some kind of seed funding or VC funding, So maybe Rohit is hinting on that.
And also, so what I'm going to talk about how the funding economics itself has changed, and you really don't need anyone to fund you anymore. If you do the right thing, the funding will come automatically, because investment has been decentralized.
Oh yeah.
If you're in the blockchain world, you get automatically invested if you are visible enough. You don't have to worry about anyone investing in you, and that's a revolution. But of course, we also have a program called RanchiMall Startup Blockchain Contract, and we do fund startups.
Yeah,
and we'll be more than glad. We were more than glad to have students from IIM Ranchi participate in that program.
Now it's IIM Jammu, no longer IIM Ranchi. Yeah, but I think Yuang has a question.
Sorry, IIM Jammu. I'm sorry.
I think Yuang has a question. Yuang, you may go ahead. You may ask the question.
Yes, sir. So when you were talking about the funding being decentralized, so there is already existing the Kickstarter kind of thing. So how it is different, like getting funding from the blockchain related thing, or a community based, which is actually like a Kickstarter. So how this is different, like how I do not have to approach an investor to get the funds.
So essentially, if you go deeper, okay, at this point of time, you have to go and ask people, give me money, correct?
Yes, sir.
Even in Kickstarter, or even in go to venture or blockchain, you have to go and ask people, give me money, correct? What if you never ask them? You just create a rule by which you said that I'm going to increase consumption of pencil. Suppose you're making pencil, and you said that I am going to increase consumption of pencil, and I'm going to increase the consumption 100 times. And if consumption increases 100 times, the valuation increases 10 times. So everyone who participates, who gets his tokens, okay, and that could be own friends only, they'll automatically get so essentially anyone who's buying pencils, he will automatically become your investor. And since you are selling pencil and people do want to use pencils, as the pencils spread, all the people who are using those pencils, they'll become your automatic investors. So essentially, your consumers became your customers become your automatic investors because you can tweak the rules of the blockchain. So that's how you could totally decentralize investment. Whereas if you go to Kickstarter, you have to go and say, okay, pay me $10, $100, $50, $10,000, and you get this. Or you go to a VC, you signed a contract. Okay, you have to do none of those things here in blockchain. But there is a small catch. The catch is the technology is still evolving. So until people are comfortable using the technology, you will not get there because people are not technical enough to write code or they cannot write. And so it's still, so the scenario I told you maybe is maybe 2 or 3 years ahead of its time today. But that's where we are getting into. And that's what we are also working into.
I have a follow-up question to this. So do I have to create my own blockchain for this, or already there exists a platform which I can be like a sub-chain of that platform, which will be like helping me in fund or tokenization of the my idea?
No, you don't have to. You don't have to create blockchain.
Okay.
Okay, blockchains are already there. You have to use the blockchain to create your rules of engagement and collaboration.
Okay.
So we are not creating. Even RanchiMall has not created its own blockchain. We are using an existing blockchain, which is called the Flow blockchain, for which we have got your ID generated.
Yes, sir.
Because blockchain creation is the job of the specialist.
Okay.
So you have to think that now that the blockchain exists in this world, what can I do? And then you start using the blockchain. You start finding out one of those blockchains and you start using one of those blockchains. Now, currently one of the blockchains which is being used for smart contracts is Ethereum. But I'm not very hopeful about that blockchain because Ethereum blockchain has a technology problem. It uses something called MetaMask, and that MetaMask is too complicated for ordinary people. Your mom and dad cannot use MetaMask, but your mom and dad, they can use internet. So we still have a little bit of technology adoption problem in Ethereum. So I don't think Ethereum will go too far, and that's why we are also making an attempt. We are latching into another blockchain which is far more easier for other people to use.
Okay.
So I will also explain you will get the idea more, you have to go slightly more deeper. The idea is too radical for you to absorb. But you just trust me that in blockchain world, all you have to do is consumption. Okay?
Yes, sir. Yes, sir. Okay.
All right. Any more questions till here? So I'll correct myself that this offer is available to IIM Jammu, and that was a slippage of mine because I was interacting with Abhishek so much for IIM Ranchi, so slippage of my tongue. So so I'll be more than welcome if students from IIM Jammu participate in our. We have 2 blockchain contracts. One is an internship blockchain contract, and second is startup blockchain contract. And we'll be more than happy in having your students participate in either or both.
Yes, sir. Staff on this side.
So what I'm going to do. Yes, sir.
Yes, sir. We will love to have some internship opportunities at RanchiMall, and we'll love to work. We will love to learn more about blockchains and get some practical hands-on knowledge on it.
Awesome. So once we are done with this session and we are already in a group, we'll start interacting. Okay. We are already in a WhatsApp group. We'll start interacting straight away there. Okay.
Yes, sir.
All right. So so we will be in touch. Definitely will be in touch. I'll be more than happy and more than it'll be exciting because see, in any new technology, it only comes from young people. I can't go. There's no other age group I can go and because no one understands these technologies. So it's only the young people like you who would understand these technology and who would create some new and brilliant ideas out of it. So I would definitely love if students from IIM Jammu take the initiative. That's also a kind of people I also look forward for. Okay, why is my screen? All right. Okay, so what I'm going to do is I'm going to come back to this section at the end of my talk. Okay, the decentralizing investment and decentralizing, and I'm going to explain how RanchiMall did that. But before that, I want to talk to you about some other financial applications. Okay, and remember, blockchain is just not about financial application. You can also do a new form of Google. You can do a new form of Facebook. But I would like to take you through some financial application, and so that you can realize how awesome blockchain is. So I'm going to talk to you about a new how blockchain is changing the financial world. Now, has anyone in your group has heard of a term called DeFi? D-E-F-I, DeFi. Has anyone heard about it? So what DeFi? DeFi stands for distributed finance. And it's one of the hottest areas today in blockchain. And why is it one of the hottest area? Is if you want to go to a bank as a customer and you ask what's the rate of interest. The rate of interest is very, very low in all Indian banks, but just not Indian banks, but also all the banks all over the world. The rate of interest rates are almost at the rock bottom. In some countries, it's almost negative, which is you get paid to take loans. It has happened in Switzerland, it has happened in Japan. And in blockchain, we can do what is called as continuous compounding of interest rate. That means there's a counter, and the counter starts immediately. And suppose you have put your money for 5 hours into a blockchain bank. You will be paid interest only for 5 hours. And that's not a possibility. That cannot be done with current day banking system. We can create very efficient loan markets with amazing risk management with blockchains. So today, it's very easy for someone to default in any banking system. And the default rate is very, very high. People take a lot of money and they simply default, and banks cannot do anything because the asset itself has depreciated so much that it's impossible to recover the money that the banks invested or banks loaned. In blockchain, we can totally eliminate it. Or what we could say that if you want loan from blockchain system, you first put a collateral. And you have to put a collateral which the blockchain can understand. And you can take loan only up to 20 or 25% of that collateral, not more than that. And when you take that loan up to 20 and 25%, if you default, your collateral is automatically adjusted. It's automatically liquidated. So it's absolutely default rate. The default rate is zero in blockchain banks. And there are blockchain banks. If you search internet, there are banks. I will write on your WhatsApp group. I'll write some terms. Okay. So one is compound. You can go and search later on. Other is dy by dx. I'm writing in the Google group. The third is Aave. These are blockchain banks with zero possibility of default, continuous compounding rate of interest, and both the lender and the borrower, they can come in anytime and withdraw anytime without doing a single piece of documentation. How efficient is that? How powerful is that? It's a very powerful concept. And the banks of the present world, they don't realize what's getting their way is how much innovation which is happening in the bank world. We can create a blockchain event-based insurance products. So we have in blockchain, we have a concept called oracles. We can create oracles which will give a data that there is a cyclone or there is a tsunami somewhere. And that data cannot be tampered with because it's been verified by 100 different people. You cannot tamper with oracle data. And then everyone who has a certified house in the zone of disaster, he gets the insurance payments automatically from the blockchain. So blockchain is a revolution in insurance also. I talked about Oracle. We could have a trusted Oracle based off blockchain event-driven insurance product. Oracle is a very powerful concept that allows you to marry the real world with the blockchain world. In fact, there's a company in blockchain world. The name is Chainlink. Chainlink went on from $150 million valuation to about $5 billion valuation, just on the concept. Okay, they have not done it totally yet. Okay, but there's just a theoretical concept that they will provide Oracle data to the blockchain, to the Ethereum blockchain. So I'll write that also into the WhatsApp group so that you can research on it. It's called Chainlink. Okay, when you get time, just look at it. Chainlink. Now another revolution which has come. See, these are the new ideas that the blockchain world is bringing just in the financial world. Okay? And these are the ideas that have happened, that is real today. Now, when you go to a market, a stock market, you need to find a buyer and a seller. Okay, without a buyer and a seller, a stock trade cannot happen in an exchange, in a stock exchange. But these DeFi concepts, they have totally replaced counterparties. They have totally replaced counterparties, which means that you are a buyer, but you don't need a seller. And they have an idea called a liquidity pool. So they use a concept called liquidity pool. So there's no seller. You can simply go as a buyer and you are guaranteed to sell, to be able to buy or sell your stuff because there are liquidity pools. But that's an amazing innovation. It just mind blows me the kind of innovation which is going on in the blockchain world, which is the way they're replacing the modern day banks and they're replacing the modern day insurance companies. And I just can't even imagine the current day large banks, they don't even have a clue what's going on there. It's kind of scary. You can also create assets on the blockchain whose value mirrors the value of conventional assets like company stocks and national currencies. But today, we have something called stable coins, called the US dollar stable coin, or that's the most popular stable coin. RanchiMall is also, we cannot, because of the legal reasons, we can't do a stable coin because Reserve Bank of India has been a little bit, it has been a little bit edgy and iffy about anything that touches its powers. So we have to be very careful about that. But we have an innovation called UPI on blockchain. You could transact, your UPI transactions could come on blockchain, and then we get the benefits of blockchain using the Indian rupee, which government of India runs as legal tender. But we can create any asset. Okay, we can create any asset which can mirror the price of company stock or national currencies. We can create an asset that can totally mirror the price of Google stock. And those algorithms are so strong that without needing central bank intervention, automatically, just from the rules of the blockchain, they will always hold their value. So there is something called the DAI, the maker DAI. I'm going to write in your WhatsApp group. Okay, maker and DAI, maker and DAI. That's a stable coin. It's such a powerful stable coin that it's been running for years now. It has never lost its peg to US dollar. One DAI is equal to $1, and that has never changed in the last 2 years. All by the power of algorithm, without anyone putting money, without any central bank intervention. Isn't it? It is amazing. It's very, very powerful. Now, if you go into the blockchain world, what you will hear is people want to do decentralized governance. What they mean is there are 200 people and all 200 people voting on proposals as to what should be the policy of that blockchain enterprise be. Like what should be the interest rates, what should be the rules, who should be allowed, who should not be allowed. And people vote on it. But so for my personal experience and my personal experiments, what I have realized that you really need you need really exceptional and talented individuals to lead a team. The team by itself, it always gets into a mess when they come into decision making. So you will hear, if you do a little bit of blockchain reading, you will hear a lot about decentralized governance initiatives. But RanchiMall is not very confident about that. We think that blockchain enables individual leadership, and it magnifies power of individuals much more than it can magnify power of the teams. Teams are required, but you still need a clear leader. That's our belief. And so our approach, RanchiMall's approach, that we don't like systems where transactions are many and margins per transactions are low. So if you go to an exchange, a blockchain exchange or a stock exchange, the broker gets only 0.1% of the transaction. And you have millions of such transactions. We don't like that. What we like is our customers, when they come to us, they have the safety that their investment is absolutely safe, but also the gains that they get is unparalleled. And we did a product like that. We did a product called Bitcoin Bonds in 2017, in which we promised this I offered to very few of my friends. I did not offer to everyone. But basically what I told, that I am going to take money from you. I'm going to invest in Bitcoin. And if the prices of Bitcoin falls, all the losses will be mine. But if the prices of Bitcoin goes up, we'll share the gains half-half. And not only that, I'm going to give you a guaranteed rate of return for 3 years. So I gave about 12% and 13% guaranteed rate of return. And we had about 40 such people, 40 of my friends who invested in Bitcoin bonds. And we have had 2 withdrawals till now. The first person put 7,000, and in 3 years, he took 44,000 rupees. The second person put 7,000, and he put 54,000 rupees. And the reason why I could do that, I could give that guarantee, was I sold a smaller amount of the bonds. I just sold that much amount of Bitcoin bonds whose money I can refund by 100%. So with that safety, our investors got an amazing rate of return. So that's what we believe in. What RanchiMall believes in, that we don't want to do those kind of transactions where the volumes are very, very high, but margins are very, very thin. We would rather have fewer volumes, very small volumes, almost zero volumes, but the rate of return of our investors are very, very high. That's our philosophy. And that's what we believe for banking products also. We believe that they should be designed, there should be fewer rules, fewer choices, but when people select those banking products, they should be, first of all, they should be safe. Safety is very, very important. And then the rate of return should be very, very high. I talked about Bitcoin bonds. And I was telling you, one of the Indian people totally missed the stock price rally of Amazon, Facebook, Google, Berkshire Hathaway, Tesla. And they should not have to do that. In blockchain world, we can say that someone in US, he buys those stocks, creates a token on the blockchain, and those tokens get sold in India in Indian rupees. And when the prices goes up, the person in India can sell his token to either another Indian, or if there's no Indian available, the stock could be liquidated in US and the person can be paid in India. We can very easily do that in blockchain world. Now, there's something about blockchain products, which I find very, very interesting. And that is, suppose you come with a great blockchain idea. Okay, you have not executed anything, there's no technology, but you just came with a great idea. And you just got enough number of people to believe in you. Then it gets what is called as a one-time small bump. Essentially, the valuation of those blockchain tokens, it will like go 40 times, 50 times, 100 times in matter of days or matter of month. And you will get that bump only once in your life. Just once. But once the bump is over, your blockchain initiative is established. You will never be short of cash in your life. And we have two examples. So the first example I can give you is Ripple. Ripple's tokens were selling at 0.0001 cents per Ripple. And it bumped all the way up to 20 cents a Ripple. Okay, that's about like 1,000 times in matter of 3 months. And recently we are finding a phenomenon with a company called Chainlink. Chainlink has got a one-time price bump. It has got a price bump which is it started from again 0.01 cents, something like that. Went to 0.1, and last it was trading at around $11-12 one Chainlink token. Okay. Once you get the bump, then you stabilize. Then you really have to deliver. And Ripple has not delivered till. People are not seeing those products yet. It's a pretty old initiative in the blockchain age terms. Chainlink is very, very new right now. So I just give an example. So all of you will get a one-time bump. And I find it very, very interesting. It's like we have our own tokens called RanchiMall tokens. We did our ICO in 2017. And we also know we'll get a one-time bump, but I want to take that bump only after the products are readily and our technology is ready and people can use it. But I have that bump waiting for me. I know that, and I find it very, very interesting. So that bump creates a very unique bootstrap pattern for blockchain-based applications, which is if you are a very early investor, a very early backer of a untested technology, then your return potential is really very high. It's massive if you back the right project. So the venture capital model that they put money in 10 different ventures and one of them becomes big and 9 fails. Essentially, in blockchain world, it is 1 in 1,000. They can back 1,000 entities, and only one of them succeeds. It will pay for the investment for 1,000 different entities. It's a very powerful thing in blockchain world. But it also means that the users who come later, they will not be so lucky because the project does not have meat. They will languish as the price will freeze after initial bump. So it's very, very important that the project must deliver value over a long term if you really want to hold credibility in market. Another big innovation which has happened is usage of liquidity pool. So what in the order books for market making. So what this means is, suppose you are a stock market trader. So instead of trading, what you would do, you would say that I'm going to offer a liquidity pool. So suppose you are trading, Ethereum versus Bitcoin. Okay, that's the pair you are trading. One side is Ethereum, other side is Bitcoin. So you can join the liquidity pool by giving exactly the same dollar value of Ethereum as the dollar value of Bitcoin. So you could say you are putting $1,000 of Ethereum and $1,000 of Bitcoin, and that's your contribution to the liquidity pool. Now, if the price of Ethereum goes down with respect to Bitcoin, or if the price of Bitcoin goes down with respect to Ethereum, in both cases, the liquidity, as a liquidity pool provider, you don't lose because one goes down and other goes up. It's like a balance. It's like a seesaw. Your average will always be the same, but you will always get a transaction fees. You'll get a 0.3% transaction fees every time your liquidity pool is touched. And that's, again, a very, very powerful idea. So that is another innovation which has come in blockchain finance. So liquidity pools are entities that get a fixed fees, but they do not share high risk while market making. And this is achieved by having them supply both sides of an asset being traded in equal amounts. But I was telling you that we don't like small fees, large transactions, so we don't participate in any such schemes. We believe in high value, smaller number of transactions with users having very, very high margin of safety. We would like us to sleep safely and peacefully, and we would like our customers to sleep peacefully. Now, the most common blockchain-based financial platforms, they use blockchain-based rules to to match borrowers with lenders. And I've already talked about this is a concept in the banking. What they do is they automatically find who is the best borrower and who is the best lender. And they define the rules of collateral in such a way that there's no default possible. I've already talked about you, so I'll skip this part. Well, this slide is talking about that, assuming you have a collateral. Suppose you have given a collateral and you have taken loan against the collateral. What happens if the value of collateral itself goes down? Suppose you use Bitcoin as a collateral, and Bitcoin prices is very, very volatile. Suppose the Bitcoin prices goes down from $12,000 to $3,000, and now the collateral is not sufficient. It's not enough to pay for the loan which has been taken against the collateral. Then that's a risk. That's a risk for the whole system. And to handle those risks, all the blockchain-based banks and blockchain-based system have come a very simple solution. The moment your collateral value falls down between the safe margin limits of the loan that you have taken, the collateral will be liquidated automatically. It will be sold in the market, and the loan will be cleared. And it will all happen without any piece of paper. It will automatically happen by the rules of the blockchain. And in 1 second, it's all cleared. There's zero possibility of default.
So,
okay, so any questions here till now?
Yes, I have a question. So, yes. In this case of collateral you were talking about, so why will somebody buy a collateral whose price is going constantly down? And second question, sir, when you talked about like, I think you were talking about the share market when you want to sell something, but there is no buyer, but you sell it without a buyer. So yes. How these two transactions are actually happening? If there is no buyer, who am I selling to and where is my money coming from? And second thing here is why people will buy such a collateral and will get into such a contract of a collateral where the value of the collateral is decreasing.
So suppose you have gold, for instance, okay? Let me give you an example. Your mom buys gold, correct?
Yes, sir.
So if you have gold in your house, and suppose you want some, your mom is getting the full value of gold price going up. If the gold prices goes up over a period of time, your mom is getting full value increase of the gold price going up. But if you want some cash in between, okay, suppose you want a small cash, a small loan against that gold, so that you can you could meet that liquidity requirement without selling the gold. Then you would take a loan against that gold, correct?
Yes, sir.
It's the same idea. The idea is that people have Bitcoins and they have Ethereum, and they're not using it anywhere, and they want to lock into the price increase of the assets. So they don't want to sell the assets because they know the price is going to go up. But they still need money because they have to fly somewhere to US, or they have to do a new business. They still want some money without selling their Bitcoin. So how would they do that? They'll put their Bitcoin as a collateral and take a loan against it. And it's their responsibility to make sure that the collateral value is high enough to cover the loan. Because the moment collateral value starts shrinking and the prices start falling, then the loan is higher than the collateral, and then the system will automatically liquidate it. Okay? So that's the reason why people go for collateral. They basically want the locked assets to give them some money and some temporary loans so that they can use it. And that's a huge market. And second, I talked about you are buying in the stock market, but there's no seller, and how that happens. And that happens because of this concept called liquidity pools, which is again an innovation of blockchain. So you are not selling to a seller, you are selling to a liquidity pool provider. And the liquidity pool provider gets the transaction fees. He gets 0.3% of the transaction. Okay. So the liquidity pool guy, it's an innovation. So it's the guy who has whatever you are buying and selling. Suppose you are using gold and Indian rupees. Okay, let's say gold and Indian rupees were to be bought in the blockchain. So he will provide exactly the same amount of gold as he'll bring in the value of the gold, and the value of Indian rupees will exactly be the same. So if the gold prices goes down, his rupee valuation is going up. He can buy more gold from the same rupee. And if the gold prices goes up, then obviously his gold value has gone up. So in that case, if you are a liquidity provider, you are not losing anything, just nothing. Your loss is potentially zero, but you are getting a fees, a transaction fees every time someone buys and sells. So what happens is people take they are buying or selling against the liquidity pool provider, and the liquidity pool system is such that more and more liquidity providers come in and they go out, and the system works out, the system balances out. Okay, so that's the question, your second question. You also had a third question, I don't know whether I got that one on. You had a third question too.
No, sir, I had two questions only.
Okay, perfect. You can answer those questions.
Sir, hello.
Yes, I can hear you.
Yes, sir. I have a question. Like this, is this liquidity pool is same as the brokerage firm that also charges some fee, and they can keep the stock if you're going to sell? Is it same as?
No, it's not same. So what a brokerage firm does is a brokerage firm, it matches, it essentially, instead of you directly selling to stock market, the broker sells on behalf of you in the stock market. So that if there are stock markets have rules of compliance, and every person cannot meet it. So what the stock markets feel that if there are some small people who would manage all the rules of compliance, then it's much more easier for them to deal with it. So in case of brokerage firm, they are not buying and selling. Okay, they are simply forwarding the buyer and seller orders to the exchange, but they still need to find a buyer and seller, and they're taking 0.1, 0.2, 0.3%, whatever they take, the brokerage firm takes. India Bulls is an online broker. ICICI Direct is an online broker. So they are not liquidity pools. The liquidity pool as a concept does not exist in current day markets. It only exists in the blockchain world because it's an innovation. Yeah, go ahead.
Yeah. So, sir, how they matches the demand and supply side? Like, if the people who are going to sell are more, but how they are going to match with that?
If the people are going to sell more, then the liquidity balance would go down. Okay, and if the liquidity balance goes down, there is incentive created in the market so that more people will come to supply the liquidity for the asset which has gone down. So it's a set of rules. Okay, it works out, and I have given you some of the. You do just go to Google and search liquidity pools in blockchain. You could look at a company called Uniswap. Okay, let me write that. Let me write it in the Google. Okay, okay, and just go and Google search about Uniswap for liquidity pools. You'll understand how it works. Uniswap liquidity pool. You'll understand how the whole thing works. Okay, it's a very powerful idea.
Okay, sir. Yeah, I'll search about it.
Okay. You just search about it. Okay.
Hello, sir.
More details because you have to think on it. They are. Yeah.
I think we are reaching the time limit now.
Okay, so I think I don't have too much. I'll finish it very soon.
Okay.
So there are interest rate models for blockchain-based bank, and in a blockchain-based bank, the interest rates are based. There's the interest rate model as to what interest rate they offer, and it basically depends on the how much of the asset which is available to be lent is utilized. Okay, so if you have 90% utilization, then your rate of interest will be higher for both borrowers and lenders. And if, let's say, an asset which is being lent is only 10% utilized, your rate of interest is very, very low. So they have this called interest rate models. Again, it's a very, very important. It's a very, very powerful concept out there. And in this case, the blockchain-based banks, they are again a very, very big innovation, which is currently the interest rate is set by central banks and is arbitrary. But here it is very, very clear. If the utilization is high, the interest rate is high. If the utilization is low, the interest rate is low. Very, very powerful concept. And whatever the difference, suppose a blockchain-based bank, it gives a rate of interest. Okay, there's a difference between, obviously, the lenders will pay the people who lend, okay, and people who borrow. Borrowers pay more and lenders get out less. So there's a difference, which is called the banking margin, and that difference goes to the owners of the blockchain, ownership token. That's how the valuation of the blockchain system goes up. So we have a blockchain bank initiative also. We are creating also a bank, as well. And we think that our bank, because our technology is so simple, it will be bigger than Ethereum-based banks. And our strategy is in the banking is we would be very careful in picking the collaterals, okay? And we would like people to be locked into collaterals for 3 to 4 years, and these are long-term assets. So the most of the gains of the people will come because we lock them into some of the best collaterals that we researched. So that's our strategy in the banking, that we would want to come up with such collaterals like Google stock, which or Facebook stock, which we know will keep on increasing in price over a period of time. Bitcoin is another collateral. We believe Bitcoin will go up in price over a period of time. But they take some time. It takes some time. It takes 3 or 4 or 5 years to get there. So we would like people to be locked for 4 or 5 years, have some very high collaterals, and people are not making money on what they borrow and what they lend. They're making money on collaterals. That's our strategy for the bank. So we talked about, I'm going to share this presentation with you. What we're talking about here is that in any system that is going to go high, you cannot offer it to everyone. You have to limit. Like in Bitcoin bonds, I had to limit. My limit was the amount of capital that I myself had, so that I can ensure that no one loses money. So you cannot offer such thing to everyone. If you get a great idea, it has to be limited. Only then there is price appreciation possible. Otherwise, you won't get price appreciation. So essentially, in a blockchain banking scenario, what we are learning is that they cannot be universal. It has to be given to the best quality people, best quality borrowers, and best quality lenders. But that's a very good system, because that ensures that people who get in, everyone is they're all adding value to each other, and no one the system is not being cheated, which is not the present day case. In present day case, banks default. People get loans and loans are never repaid, and those scenarios are not possible in blockchain scenario. Okay. Now there's another initiative which is called the price stabilization mechanism. This is a third initiative which is pretty complicated at this point of time. But what I'll tell you about this is it's another innovation. This innovation is about arbitrage, usage of arbitrage. And this is again another innovation, that people can use arbitrage, like the rate of difference between a blockchain price and an open market price, and they use arbitrage, and they use arbitrage as a very powerful tool to stabilize prices. And again, a massive initiative, a massive innovation from the blockchain world. So in summary, these are the 3 big innovations, okay, in financial world from the blockchain. The first is the usage of liquidity pool to eliminate counterparty in trading of assets. Second is automatic borrowing and lending. Automatic borrowing and lending without, everything is automatic on the blockchain rules, on the basis of utilization rates. And third is arbitrage as a tool to use stabilize prices. Okay, and any DeFi initiative will take, any blockchain DeFi, any blockchain back, any financial institution that will take, all those innovations, they will use one of these 3, and they won't take any other. These are the 3 basic things which has led to a massive explosion in blockchain-based finance. Cool. So that was me. I'm done.
Sir,
is there any other questions? Yeah. Is there any other questions? And yeah.
Yes, sir. One question. Yeah. Sir, you talked about you compared private equity model and the blockchain model. Like in private equity model, like if an investor if private equity firm invest in 100 firm, and if one firm succeed, then it's okay for that.
That's VC. VC ratio is 1:10. VC ratio, private equity is even later. Private equity is 1:6 or 1:5. Okay. So private equity, if private equity can only invest in 5, and it can allow 4 of them to go bad and only 1 can succeed. That's the maximum capacity. So private equity firms are very careful. Venture capital can go to 10. Okay, they can invest into 10, and they can if 9 fails, they can still survive with 1 guy who is successful. And the blockchain can go up to 1,000.
Yes, sir. So you also talked about that the one-time bump, right?
Yes.
So, but in case of private equity or venture capital, they generally wait for around 5 and 10 years, and they finally exit the investment with a return of 30 to 35% generally. But with the blockchain model, like to get a one-time bump, how long an investor has to wait to get a one-time bump?
Well, our time spans are very small. Okay, so the one-time bump comes within first 3 years of the blockchain.
Okay.
It's not mandatory. See, so I was telling about one thing which I did not talk about was how did we eliminate customers. We have so our funding comes from because we are using Flow as a blockchain, and we use Flow. We realize that Flow has still not got that one-time bump. Okay, that one-time bump is still remaining on Flow. So what we figured out is that if we can make some great products on Flow will get a one-time bump, and that one-time bump will pay us for all our expenses that will take for a couple of years. So we have been investing money in Flow. We invested in 2017, 2018, 2019, 2020. We are only investing money in Flow because we know that one-time bump will happen. So now for Flow has been into existence for 7 years till now, and the bump has not happened yet. But the bump will happen. We know it will happen, and that's our business model. And because the bump is going to happen, I can safely invest into the blockchain products of Flow blockchain. And when the bump happens, I'll be paid handsomely. And once that bump happens, along the way, we'll also have some new products, new ideas. And since it's very, very new and very, very innovative, some of the things we have done in the blockchain world has never been done in the world before. So it's a learning experience for us, but we'll also contribute with new ideas and new technologies to the world, which they don't have today from Ethereum.
Okay. Sir, one more question. Like you talked about the usage of arbitrage. I just wanted to know, like, if this blockchain is so computerized and so fast and quick, so there shouldn't be any price differences and there shouldn't be any arbitrage profit. No,
so blockchain is not fast. Blockchain is not fast. See, that's what blockchain is not fast. Blockchain is slow. Okay. So now if you read a theoretical book, okay, if you look at what is called as efficient market hypothesis. Have you heard of that term? Efficient market hypothesis?
Yes, sir.
So essentially in finance, there's this concept called efficient market hypothesis, which says that markets will correct any price difference instantly. So there is no arbitrage possible. But that's not what we see in blockchain world. Okay, we see in blockchain world there are massive arbitrage possibilities. Okay, so if you're a trader and if you want zero risk, absolutely zero risk way of earning, you can very easily find arbitrage possibilities in US dollar and USDC, which is the blockchain version of US dollar, or DAI and US dollar. And so there are always tons and tons of arbitrage possibility, and it never goes away. That's what we are seeing. It's not an efficient market.
Okay.
Yeah. And arbitrage is also, but the most interesting fact is arbitrage has been used as a tool to stabilize, to give value, like to solve system problems, to create stabilization, to make sure that people conform to the rules. And that's so interesting. We never saw arbitrage as a positive force. We just saw that arbitrage was something that is like some small time traders, they make money, like short-term money. But that's not, the meaning of arbitrage has totally changed in blockchain world. It's being used as a powerful force, real power, to be able to enforce the rules of the blockchain. And that's very, very powerful.
Yes, sir. Okay.
Any other questions? Okay, so thanks a lot, Rohit. Of course, like Rohit, can you hear me? Are you here?
Yes, I can hear you.
Okay, actually, I just saw a message that Rohit has left. So Rohit, thanks a lot. Thanks a lot from bottom of my heart, like to agree to take this session at such, late hours for my students. And of course, like blockchain is like a endless value. Like we are still experimenting. I'm sure like entrepreneurs like you are also, finding daily new use cases. I'm sure this session would have been very useful for my students. And I think we have some students who are not part of my coursework. Probably they are from the first year. And currently first year midterm examinations are also going on. Okay. So I sincerely appreciate, student coming out, taking out the time to attend this session despite the midterm examinations. And I'm sure this is like one of the first event we had on the blockchain, and we'll have a series of such events in the future. and we'd definitely love to host you also, to come to physically our campus. And because I noticed one thing that in this session, we could hardly get the 10 or 20% of the energy which you usually bring. But that is the limitation of the medium, like the constraint of the medium which we are using right now.
Yes.
So we definitely love to, host you in the future. And if any of the student, if they want to add on something, maybe they can. This is the right time if they want to add on anything. Saif or Nikhil or Jay, Yuvank, anything? Mr. Manish, would you like to add on anything?
Yes, sir. Sir, if like in further sessions, if there are any, or like when you visit the campus, can we have a look at the blockchain, like how as an individual, a non-developer, as a person, I got the big idea you talked about the blockchain, like how it is so innovative, but how as an individual, as a manager or as an entrepreneur, I can utilize the blockchain to efficient my startup or to like actually make use out of it?
Yes. So what we have done for that is we have already, are you in the WhatsApp group that we created?
Yes, sir, I am.
So what we'll do is we have put people, okay, so we will, once your exams are over, we will actually take you to the blockchain, actual blockchains, the nuts and bolts of the blockchain. Now you have to realize that the technology is still evolving, but we still have done some amazing stuff, technology work in the blockchain, and we'll take you through this. And then you will get a first-hand feel as to how can you use and do blockchain.
Okay, sir. Okay, that will be great.
We'll continue the interaction. This was just to give you a picture as to what blockchain could look like. Okay, what blockchain can do, and then you will also do the real thing, which is hands-on on the blockchain, and that's due. That we have to do. We have to do that as well. But you need to get the picture. You need to understand what blockchain is possible. Yes, that is very important. Otherwise, it's just a theory, right? Then you are not in a position to innovate on blockchain. You need to understand what blockchain can do, and then you should also have the tools to actually do it. And you have to realize that you don't need to be a great technician, or you don't have to be. That's what problem we are working on. An ordinary person should be able to use blockchain and create innovation.
That was our concern, sir. Yeah.
Yes. That's exactly what I'm trying to do. I mean, we have reduced, like when we started the first day in 2017. You needed to download a wallet. You have to download a 20 GB. You have to understand the meaning of keys, and you have to understand what wallet phrase is. And even now, if you use Ethereum, you need to know gas. You need to do MetaMask. You need to do many concepts before you can even get a start. But today, if you are if you were in the WhatsApp group, you could create a blockchain ID just right away like that. And we will show you. We are going to come with a product called UPI on blockchain. Like we have put it, so you could see how easy it is to use blockchain and connect it with UPI world. And you will all participate in that. We'll make you participate in all of that, so that you can see how it works. And then you can also see how we have structured. We have a concept called blockchain contracts, in which you can create new kind of companies, and you can see like RanchiMall has been incorporated on blockchain. And you will see how we incorporate ourselves on the blockchain. And so we'll continue that conversation over the group that we have. And you can see that group as an automatically participation in blockchain. And if all of those who are interested in it, they can go deep, and they'll find all the magic that comes out of the blockchain world.
Okay, sir.
And also, I would like to say a very, very big thank you to Abhishek, because as Abhishek said, that the energy that comes in physical interaction is definitely more. You get more in this medium when you're not seeing my face, you're just seeing the screen and just listening to my voice. It's slightly limiting. We'll have a lot of fun when we meet together, because we're definitely going to. I'm definitely going to come and meet Abhishek. So we will compensate for that, Abhishek.
Thank you, Rohit. Mr. President, Saif Ali Khan, do you have anything to add on before we conclude the session?
Hello, sir. Thank you for the session. We all learned a lot, and most of us had a view on blockchain that is mostly connected with the cryptocurrencies and all. And we, after tonight's session, I can say that there are many more applications of blockchain, and we can think on it, and it has opened certain doors for us, which we have to explore. And sir, I will like to thank you from the bottom of my heart for this session. Thank you.
Yeah. Thank you, Saf. Thank you so much for coordinating with me and getting all of this arranged. And thank you, IIM Jammu students, for such a fantastic participation. Some of you have examinations tomorrow, and all of you came for this session. It's amazing.
Yeah. Okay. Thank you, everyone. Rohit will definitely love to have more such session. And thank you to all the students also for staying so late. And all the best for tomorrow examination. And for second year student, I look forward to seeing you in the class tomorrow. Yeah, thank you, Jay. Yeah.
Thank you, everybody. Thank you so much. Thanks for having me.
Thank you, sir. Thank you.
Good night, everyone. Thank you.
Good night.
Good night, sir.